Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, we're going to jump right into this because I have two trades I want to show you today. I have a members trade idea for which I had a member send me an idea for a trade. So we're going to talk about it, break it down. She wanted me to look at the trade and just talk to her about how I see the trade developing. I'm going to share that with you today. Now, I'm also going to show you a poor man's covered call trade for which I'm knocking it down using a large S&P type company. And I'm going to show you how I'm having success with a strategy I use when I determine if I want to get involved in a poor man's covered call trade. Now, if you've never been to my channel, this is what I love to do. I love to share with everyone on the channel my trades because I'm from the old school, man. You show me once, you show me twice. I'm going to pick it up quicker. Okay, I can read a book and I have read books, but I love when you show it to me. So that's what I do. And if you've never been to my channel, I really hope you would subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. Let me know you like what I'm doing. Now what we're doing is this. We're going to answer a member's trade question today. I'm going to give her my opinion on the trade she came up with, and I absolutely love it. She's going to use the cash secure put and the covered call. And this is what members get. You know, I talk about my membership every video. It's my passion. Okay. I love sharing my talent and I've been doing it for years. I mean, I have had an email list since before the dot-com boom and bust. I remember I had an email list of 350 people back then, right? They just wanted to see the world through my eyes because back then I tried to day trade and swing trade. Didn't really have the kind of success I thought I could. And to be honest with you, I wasn't as good as I thought I should have been. Yeah, I thought I should have been. But fast forward some 5 years ago, my mentor Jerry showed me the way writing covered calls. I'll never forget it, man. I had my head in my hands, frustrated that I wasn't a good day trader, swing trader, and to be honest with you, almost gave up. Now you have to understand, I've been doing this for 20 years, wasn't that good. Jerry said, look, you're done with that. Now I'm going to show you how I generate income, how I put money on the table. Now understand, Jerry is 79 at this point. He is showing me how he puts real money on the table, pays for his living writing covered calls at 79, 80 years old. So of course, I am like a sponge, man, trying to learn, trying to be successful. And I'll tell you what, he showed me, he mentored me, and here we are some 5 years later, knocking down over $350,000 since that first conversation about selling premium with Jerry. So what I want you to do is go to my website, cptdashboard.com, scroll to the middle of the page and watch my story with Jerry. He's more than just a friend. I'll be honest with you. He is the inspiration behind this entire channel because when he paid it forward to me, I want to pay it forward to you. And that's really at the end of the day why I mic up, do this every week. Because look, man, YouTube doesn't pay me enough to spend the time. But I love your stories, man, because it jacks me up to up my game to continue to sell premium for my family. Hey, look, what I always tell you is this: get off the bench. Quit watching other people have success. You can have this success yourself. I want you to feel confident knowing that a guy like me has had the success I've had. You can have it too. Okay? All you have to do is put in a little effort, get your financial education, open that small ball account, and do your very first trade. Okay, so go to my website, cptdashboard.com, watch my story with Jerry. All right, let's get right to it now. I had a upgraded CTP Dashboard member send me this trade idea. Remember, when you're a member, you get access to me. You send me an email, it goes to the top of the line. Now look, this member talked about a Redfin trade for which she's been watching. She likes doing the cash secure put first. If she's assigned the share, she'll then write a covered call. Now these are 30-day trades. So here's the setup. Redfin's trading at 52.57. She's going to sell the 50 out of the money strike 30-day trade and pick up some $1.25 in premium. That's a cash on cash trade of 2.5%. Now remember, she's upping $50 a share to tell the greater stock market she'll buy somebody's shares at 50. Now, once somebody takes that insurance, remember the other side of the trade is somebody actually paying her the $1.25 for the right to assign her or put her the shares at 50. So they're buying insurance because they cannot lose more than $50 a share. Well, she's in a good spot here because she would love to obtain the shares at 50. She wants to collect the $1.25 premium for putting up that money for 30 days. So she does the trade. Now the deal is this. If the stock trades below 50 at expiration, this is 30 days later, she's going to be assigned the shares. It could be trading for $49.99. She gets the shares. Now her plan is this. She now has the shares at $50. She's going to then write a 30-day covered call, meaning she owns the shares. She's going to give somebody the right, but not the obligation to take those shares away from her at the money, at 50. She's going to collect some $4.40 for that trade. 60 days, she's going to collect some serious premium. That would be $4.40 in covered call premium on $50 invested, right? Remember, she put up $50 per share. So that's $50 she invested. She's going to get $1.25 for the cash secure put. She's going to collect the $4.40 when she writes the 30-day covered call. So do the math there. She collects well over $5.50 for that, and that's for 60 days. She collects some $5.50 on a $50 trade. So in 6 months, she's making more than 10%. Or she's making more than the historic annualized S&P 500 return in just 60 days. So for many people, this sounds shocking. For many people, they don't believe it. And to be honest with you, if you talk to a wealth broker, they'll say this can't be done because they want your money. They want to manage your money and charge you. But this is the reality of selling premium. I do it every single month. We can make 3 to 4 to 5%. And in this case, notice 10%. In 60 days. Now, what I wanted to do here was show her what I'm thinking, okay? What I'm thinking is this, and I'll go to the chart here on Redfin here in a minute, but I wanted to show her what I think. If I were in this trade, what I would do. So what does John think? First of all, I don't think Redfin trades to 50 in 30 days. I actually think it trades in this range between 48 and 58. Now, I'm going to show you on the chart, so hang with me. I actually think Redfin is in the lower part of its range. It's basing here, and I think it drifts a little bit higher. We're talking 30 days here, right? I don't think she'll be assigned the shares. So she'll collect the $1.25 on her $50 investment, and she moves on. If she is assigned the shares, meaning Redfin has traded below 50 after expiration, she's going to be assigned the shares. So she'll come in Monday morning and there's her shares. She'll have 100 shares at $50 cost basis. She's going to write a covered call and collect $4.40. So if that trade scenario plays out, that's great. She's selling the at the money 50 for shares that are right around 50. So she's going to collect $4.40 in premium on top of the $1.25 premium. And if the shares continue to drift higher, she has her shares taken away at 50. She collects the pile of cash and she moves on. Now, that's a perfect scenario. But what I love to do is talk about if Redfin were to fall further. So let's talk about that now. Say, for example, she's assigned the shares at 50, the stock falls to 45. She's assigned the shares at 50. Clearly, if she writes an at the money 45, she's going to lose $5. She's not going to make up her stock loss with premium she would collect on the next covered call. So in this case, if the stock's trading at 45, she was assigned the shares at 50, she's going to have to write a deep out of the money covered call, maybe the 50 strike. She's not going to collect that $4. So she'll probably collect $1.50. And 30 days later, if the stock is trading at 50, she'll have her shares taken away. She will have pocketed probably over $2.50 for 60 days. That's still a decent cash on cash return for $50 invested. Now, that is the scary part with writing covered calls. This is where a lot of people find themselves in this market. They will find themselves executing on a perfect trade, everything's lined up, then the bottom falls out. It happens to all of us. The key here is that we learn how to manage these trades, okay? It's all about managing the risk. Now the stock's trading at 45. She writes the covered call at 50. The stock falls further. Well, she's going to manage this trade because as that premium, remember the premium she got paid, as that premium falls, she's going to go ahead and buy that back, right? She's going to be prepared for when a stock like Redfin turns around. Wall Street starts to support the stock. It starts to turn around and it's moving higher. Hopefully it gets back in her range where she can write another covered call. This is what I call spinning plates. We have to manage our trades. We're spinning plates. This is why when I talk about the Keltner channel and getting involved in stocks when it's trading below its Keltner channel mid, remember, Keltner channel is a stock's trading range. So if it's trading below its midline, then we're not buying a stock with fluff, right? It's likely the stock will go higher than lower. And even if it does go lower, it's already lower in its range. So it gives us the best opportunity to move higher. Now, the reason I mention that, and I'm going to go to the charts right now. The reason I mention it is I want to keep it as simple as possible. I hear people all the time saying, well, what indicators here and what chart service there and these numbers, day trade, 50-day. No, I use one chart, Keltner channel. I use the Keltner channel mid as my baseline. If I'm buying above the Keltner channel mid, then we're starting to get in a little fluff. Doesn't mean I don't buy, but that is my very first indicator. Lets me know if I'm buying the fluff. Then I look at the RSI and we look at some other things because that gives us an oversold versus overbought. But I'm telling you, you can keep it super simple and you can make a lot of money. So let's go to the chart right now and I'll show you exactly where Redfin's at and where I think it goes. Well, this is the chart I included on her email. And as you can see, right now Redfin's trading for $51.41. And you can see it's been trending lower because Redfin is one of those stocks that is high volatility. It's been beaten down. It hasn't been in favor. Just like Zillow, Rocket, Redfin, they all play in that internet space of real estate. And as real estate keeps going higher, you'd think these stocks would because they are killing their numbers. Every single quarter, they are smashing the numbers. Well, for whatever reason, Wall Street is not playing in their sandbox. So you're getting some great value here because in my opinion, these stocks aren't going to zero, man. They are destroying earnings. And if you saw Zillow's last earnings, I can't even believe that stock is still under 100. But hey, it's Wall Street. So in the case of Redfin, notice it fell into the high 40s. You can see it right there. Then it bounced back up and now it's in a spot where resistance, right? The stock's trying to push higher. It's trying to push higher. The resistance could be that Keltner channel mid right there. So it's playing under the Keltner channel. Now, notice this trend line. Since it hit this recent low right here, it is moving higher. Now, if it could break above the Keltner channel mid, and I believe that's around 52X, that could become its new support. And it could move higher just like it does right here. Remember, all we need is 30 days. That's what we focus on, 30 days. So right now, I would say this. There is a likelihood that it got a nice little push towards resistance and it could peel back. So she could be assigned the shares in this 30 days. Or if it continues to push higher, she won't be assigned the shares. Now, if she is assigned the shares, it's because the stock has fallen to 50, which means she has $1.41 to be mindful of. If the stock starts to fall, she's going to be watching that. But chances are, because we have this nice line of support, we're talking another 30 days, right? It could move higher. She has her shares taken away. This is one of those trades where I like the trade, but I guess if I had to sit back, I might wait for it to see if it breaks resistance, goes above the Keltner channel mid. Now, if it does, then I get involved because I don't think it trades sideways here. It did trade sideways here and sideways here. But I think right now you could see it's trending lower, but it's coming back to that Keltner channel mid. So it has an opportunity to go back to the Keltner channel mid, or it could fall back off to the high 40s. That's the real worry here if you didn't want to be assigned the shares. But it sounds like she doesn't mind owning the shares. So I think you do the cash secure put right there. You get assigned the shares. And I do think when you write that covered call, the stock would peel off a little bit and then move back to the Keltner channel mid. So let's go to that poor man's covered call trade. I invested $4,750 on a UPS 2-year long leap. I bought the January 2023 leap. I bought the 80 delta, which is the 150 in the money call option. Meaning I put up $47.50 per share. I bought one contract, so that's $4,750. I have the right to buy somebody's shares at 150. Okay, so that's the idea here. I buy that 80 delta option because remember, 80 delta represents for every $1 in stock move, the optional move about 80 cents. So what we're looking to do here is we're looking to pay for that option so we have protection, meaning if my shares are taken away, I can buy somebody's shares at 150. As the stock goes higher, if I'm right, if the stock goes higher, my option makes about 80 cents for every $1 move in the stock price. This is where I love using my secret sauce when I do poor man's covered calls. Usually I do not enter a poor man's covered call unless a stock has been hammered. Absolutely love waking up hearing a great company is getting slammed even though they've had great earnings. That's how Wall Street works, man. You are priced for perfection, and even when you give them perfection, man, they're going to slam you hard. That's when I jump into action. UPS had fallen almost $20 on the day of their earnings. So if I'm going to be involved in UPS and I'm going to buy a 2-year-long leap, well, I want to buy it on the day they're getting slammed some 10, 12, 13% for which they were. That's the time, because remember, call options, right? Call options are when the stock goes higher. Put options are when the stock goes lower. The idea there being, if the stock is getting crushed to the downside, the puts are just exploding in price. However, the calls are not. So you can get all these calls cheaper. So on this day, when UPS's earnings get rocked, I decide that's when I'm going to get involved. So when the stock was trading at about 193x, I went ahead and bought the 150 2-year-long leap 80 delta call. I can buy somebody's shares at 150. Now, of course, that gives me protection. I'm going to now write covered calls. It's the poor man's covered call, right? We do not own shares. We have taken an investment and put it into a leap. We're going to use that leap as protection, and we're going to write near-term 30 delta strike covered calls. We're going to generate near-term income as if we had the shares. It's called the poor man's covered call because I only invested $4,750 versus paying $19,300 for 100 shares. Okay, so the idea here is with the poor man's covered call, I had that leap for protection, and I'm going to write those 30-day, 30 delta covered calls. It's a pure premium trade, meaning I'm going to write the covered call, collect the cash, and then I'm going to buy the option back later in the time frame, collect the premium, because chances are if the stock doesn't get to the strike price, that premium's going to fall off. I'm going to buy it back. I'm going to make the difference, right? And then I'm going to do it again. Well, back in June, I wrote this to the members. Now remember, everything about John is 30 days. So this trade would have worked out, but I want to show you this. This is a member's email I sent about UPS. This is back posted on June 15th. Look at the chart. On June 15th, the stock is trading around 200. I actually said you could either do a cash secure put or a covered call. Around 200. Buy the shares at 200, write the covered call. Take the money, do the cash secure put. And of course, I include my thinking, and of course, I include an example trade of the covered call or the cash secure put I would do. Notice the cash secure put idea, a 200 strike when the stock is trading at 292 would have paid $4.25. That's knocking it down at a 1.6%. And I'll tell you what, that is the kind of trade we're looking for. And at the time, it didn't look like much risk. I mean, it had fallen off. And of course, we were going to go ahead and sell the cash secure put, thinking it would not go lower and move higher. And in fact, that's what it did. So in this case, I posted the cash secure put as the preferred trade here. I love if you did the 200, which is 92 cents out of the money. I don't think you'll be assigned the shares. The stock would go higher. You pocket 425. We move on, and that's exactly what happened. Absolutely love that trade. Now I'm watching UPS, right? So UPS is now fallen some $20 after earnings. So I slip in and I buy that 2-year-long leap. I buy that 80 delta, the 150 strike, and we're going to write covered call. So now let me show you what I've been doing with this poor man's covered call trade. Now remember, UPS took an absolute nosedive after earnings, but what I said to the members back then is this, real simple. UPS is not going to continue to fall. It's just not. I mean, FedEx, UPS, they've proven they can get hammered because their valuations get higher for a trucking company, right? I mean, UPS and FedEx are as much a technology company as any other. But at the end of the day, people think they're just a trucking company. Well, that's not true. But here's the deal. When the stock falls, that's the opportunity. This thing had fallen some $20. So those leap call options were getting crushed, right? So I slipped in, bought that call options. Now, I invested $4,750 or $4,750 for that 150 in the money leap. Okay. So with the stock trading right here at about 192, what I did was this. I did the 30-day 30 delta. Remember, the delta also represents a likelihood of the stock getting to your strike price. So you want to do the 30 delta on your short-term covered calls because the likelihood of it getting there is not very likely. Well, that's what I did. Very first one I did, I got $2.70. As you can see, it traded sideways. And as we got near expiration, it wasn't going to be anywhere near 200. I went ahead and bought that one back, I think for $1.25. Now, we do not sit on our hands. It's been a couple weeks now. I go ahead and sell the next 30-day 30 delta trade. Sure enough, I go ahead and pick up something like $2.50. And here we are. Remember, the 200 strike. It's not at 200 yet. And in fact, based on its recent trading range, this thing is actually peeling off a bit. Guess what? I'm going to be able to buy this one back for under $1 and we move on. Remember, I've invested $4,750. I've collected over $1.70 here. I'll probably collect over $1.25 here. And this is the amazing thing. That option I paid $47 for, it's now trading for $51. So if I decide to wash my hands of this trade right now, the stock has literally traded sideways since I made that call. I will have made over $300 on near-term covered call profits, and I will have made almost $5 on the call option, or $500. That's over 8 points on a trade that has moved nowhere. My investment was a mere $47.50 cash on cash percentage gain. 8 points on $47.50. Yeah, that is phenomenal. Now, of course, I'm not going to cash out. I do believe UPS continues to go back to 200 and above, so I'm going to keep writing these 30-day 30 delta trades. So what I want to leave you here with today is this. One, if you liked anything you heard today and you want to be a part of the membership, get the emails, get the Seeing the World Through John's Eyes. Man, I got a 1 free month offer for you. You don't know what you're missing. I'm telling you right now, man, members are getting ideas. And of course, I show you all my numbers. I just sent out my monthly August numbers, knocking it down. But what I want you to take away from the poor man's covered call trade is this. If you learn the strategy, right, because it has many more moving parts, but if you learn the strategy, I can be much more diversified in my portfolio than I am with actually buying the shares. Let's do the math. Remember, had I bought 100 shares of UPS, I'd have spent $19,300. Well, say I had about $5,000 for each leap option, right? I wanted to invest $5,000 on a leap option and do the poor man's covered call. I could do up to 4 leaps on UPS, making 4 times this money, or I could have 4 different stocks, making the same amount of money with those 4 stocks. Hey, I'll tell you what, the poor man's covered call is something you really want to look into. I'll tell you what, it's absolutely a tool in my trading bag. Now look, did you hear that I have a new challenge coming? $30,000 a month in my 401k. Yeah, that's right. I am now preparing myself for a $30,000 a month using my 401k. Now you have to go to facebook.com, search CPT dashboard and follow my page. That's where I'm posting all of this up. I'm preparing for retirement. And when I get my hands on my 401k, I am going to use it to generate $30,000 a month. And if you think that's crazy, well, a lot of people thought it was crazy when I said I'd take $10,000 and make $1,000 a month. Did that for my kids in the earlier part of this year like it was nothing. It's what I do. A lot of people thought I was crazy when I said I'd make $1,000 a week in a 10-week period. Turns out I made $18,000 in the same 10-week period, knocking it down. So for me, I love challenges. And the next one for me is going to be making $30,000 in my 401k. I want you to be a part of it. So all of my members are going to get all the trades. They're going to get everything. And I'm even going to create a website. But if you want to go to Facebook, search CPT Dashboard, follow the page. You're going to see some stuff posted there that I think you're going to like. Hey, look, I hope you learned something with this video, and subscribe, like the video, and we will see you next week. Thanks for watching. Be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.